You're welcome back. Yesterday, Joy News' Malik Abbas Dabu sat down exclusively to have an in-depth conversation with Elliot Amwako. He's the Deputy Director of Banking Supervision at the Bank of Ghana. It was all about the recent closures of savings and loans companies, and he learned a lot. It's time for us to learn what he learned. Stay with us.
Hello, my name is Malik Abbas Dabu. It's been long coming that some savings and loans company were going to follow the same treacherous journey that the banks took. And it came to pass on Friday that the Bank of Ghana announced some licenses of 23 savings and loans companies had been revoked. Revoked essentially because these companies were found to be insolvent. It's been argued variously that the bank, the central bank that is, the regulator could have arrived at some other solution other than that which it relied on. Is there a basis to these claims? I have with me a Deputy Director at the Banking Supervision Department of the Bank of Ghana, Mr. Elliot Amwako. So, Mr. Amwako, good to see you.
Good to see you.
It's been a tough few years at the central bank.
Very hectic.
How long have you been there?
Over 20 years.
This must be the most difficult period for the bank.
Definitely. I mean, the past 2 years has not been very easy. We've had to embark on this very difficult journey of cleaning up the banking system. So yes, it's been a difficult journey.
So this is a cleanup?
Yes, as we've put out previously, beginning with the banks, an attempt was made at comprehensively cleaning up the banking system. That was based on information that we had that most of these institutions didn't have good asset quality. So this journey began, which started with the revocation of licenses of 2 banks in 2017. Mm-hmm. And what had followed on
You're talking Capital Bank and UT Bank?
Yes, what had followed on therefrom. In total, 9 banks had their licenses revoked.
Notably all of them domestic or local banks or indigenous banks, the majority of them.
Well, the majority of them, yes. And then followed up with the microfinance institutions early this year. And then this is the last set, which is for the savings and loans and the finance house subsectors.
Let's start from that last point, which is where it's bleeding currently. At 23 of them, you said that all 23 of them were insolvent. For the layman, what does that mean?
Yeah, now when we say institutions are insolvent, it means they are not carrying the appropriate capital that they require per the regulatory requirements to operate as a viable banking institution. So either capital is impaired or non-existent, which is culminating in maybe serious liquidity challenges as well.
And you're using technical terms, capital is impaired or non-existent. What do you mean by capital is impaired? Because as far as the customers know, the institutions are functioning. They can get their money when they want it.
Well, as a requirement for a bank to be licensed to take depositors' funds, it's required that shareholders would put in their stake, which is the capital that the shareholders themselves put in, to ensure that the depositors' funds would be safeguarded in the case where the funds are stressed. We have a requirement, and for that subsector, the banks are required to hold capital of a minimum of 50 million, those institutions in that category. Now, when we say the capital is impaired, it means that the institution has either through bad decisions or taking risks and eroded their funds, their shareholders' funds, to the point that they are insolvent. They are not carrying the appropriate capital to carry on their business of banking.
So you're saying the minimum capital that was required by these savings and loans companies was 15 million?
Yeah.
And when did you come to this realization that either the funds have been dissipated or that led to them being impaired, or they were not existent in the first place?
Yes, and as we indicated in our press release, yes, this journey has started way back. And per our procedures. Supervision is an ongoing thing. So you go into an institution and you determine that transactions have not gone very well and they are not holding their appropriate capital. Now, our law requires us to go through certain processes. So for all the 23 institutions, they would have come in at different times. You do not have the same set of standards for everybody in terms of when you detected that they were insolvent. But what we've indicated is that we take them through various processes. What the law requires is that if your capital is impaired, we need to take you through a certain set of processes, which includes giving shareholders the ample opportunity to recapitalize the institution to the point where we believe it is viable and that depositors' funds with them will be safe. Okay, so for different institutions, they happen at different stages. But what we've also indicated is that we've taken all of them through these legal processes, giving them time and space to, on their own, rectify these capital deficiencies. But unfortunately, for these 23, they were not able to.
So you're saying all these 23 were given the opportunity that the law establishing them, or the regulations provided for?
Yes.
And they didn't meet it?
Yes. And it starts even way before that. I mean, even before you get to the point of even being insolvent, when we determine that your capital is impaired below a certain limit, not to the point of insolvency, our guidelines gives us certain procedures that we take you through, including giving you the required number of days for you to recapitalize, and shareholders have been taken through.
How long have they been in this state?
It varies. Like I said, these are 23 institutions. It varies from institution to institution, but we embarked on this journey for the past 2 years, since 2017. So yes, for most of them.
Why not before then?
Even before then, yes. It's as part of our normal regulatory routine. We pick up these things and deal with institutions on that scale almost every day. It is what we do routinely. If you go into an institution and you realize that a capital is impaired, like I said, you take them through the regular processes. And we've been doing that. What we've said with this past 2 years is this holistic cleanup exercise that was embarked on, where it was decided that this was going to be done holistically.
Do I understand you to say that this is a problem which has existed, but for some reason has been massaged over the years, and it's grown to a point where you have to take the rather drastic decisions that you have taken?
I will not say massaged, because just as you're asking me why it got to a point where you had to revoke their licenses, it's because you have to give them the ample opportunity to recapitalize, to avoid a situation where this line of action will be taken against them. So it is not about massaging, it's about going through the due process.
Do we know on the average how old these particular 23 institutions have been in existence?
If you go through the press release, you realize, I think for every institution we provided the details. I don't have for all the 23 on top of my head, but yes, we can glean from the information that's provided.
So 23 of them have gone
We have some that has been in existence for very long, and we've had some that has been in existence for barely 2 years.
Barely 2 years?
Yes.
And they have not met the requirements?
No, they had met the requirements, but the capital is eroded.
How did that happen?
How did that happen? It's like we said, we've outlined a series of reasons. Excessive risk-taking, poor governance, and we always refer to poor governance because, yes, that's what gives rise to excessive risk-taking. If you have institutions that are investing depositors' funds in ventures that will be too risky for them to recover their funds. We've had institutions that are investing depositors' funds in related entities. Okay, so when you have these things happening and a culture of weak governance, okay, to support the effective management of depositors' funds as prescribed by our requirements, yes, the end result is what we're seeing.
What do you say to those who say the poor governance started with you, the regulator?
The regulator does not get himself involved in the daily routine running of an entity.
The regulator does supervision.
Yes.
And that's what your department does.
What we do is to provide that framework for which allows banks or entities that we supervise to operate. We go in periodically to supervise to ensure that they are following those guidelines. Okay. Now, when we talk about poor governance, this is what happens in the boardroom, where the regulator will not be there. Decisions are taken in the boardroom. This regulator will go in and find out the result of that decision, and the regulator will take action based on that. But that decision of where to place which funds, where to invest depositors' funds, which institution to grant loans, this is left to the effective day-to-day management of the entity. And we expect that all entities will have effective governance processes, including risk management procedures, to ensure that depositors' funds are protected.
I'll come back and talk about the regulatory failures that have occasioned, especially in respect of the banks. Let's take with the 23. How do we seek to protect depositors' money? Because what you say in all of your statements is that the primary reason for which you are taking these decisions is to protect depositors' money. How are you protecting depositors' money, especially in respect of the 23 savings and loans companies?
As we've indicated in our press release, the decision to revoke the licenses has been taken, and a receiver has been appointed. The receiver would take over these institutions effective the date of revocation, and we've also added that the government has agreed to make funds available to the receiver, okay, to be used to support the depositors, the vulnerable depositors whose funds have already been locked up in these institutions. Don't forget that these institutions had been poorly run and were so illiquid to the point that these depositors were already not getting their funds. We have numerous situations, and I'm sure you have numerous reports of depositors queuing at institutions for their funds. And that's not the kind of banking environment that we want to encourage.
But you are in banking. You know that if everybody who has their money deposited in the institution amass there one day, they naturally can't get their money. But that's evidence.
That's not what we are talking about. We are not talking about a situation where there is an unusual run on an institution. We are talking about a situation where systematically people go for their funds, and the banks, these institutions are unable to pay them because the funds do not exist, because the funds have been dissipated. And that's the situation we are talking about. So you have these situations coming up, which leads rise to depositor agitations and then loss of confidence in the system. So these depositors were already in that state. And we believe that this action is rather going to get them something that they were already not getting.
There's a noticeable variation in terms of the protection that you provide for those who had their money in the banks and those who have their money in the savings and loans companies. On News File yesterday, you pointed out that the deposits in these institutions cannot be guaranteed, that people have to come and you have to verify what deposits there are. In the case of the banks, the central bank went all lengths to assure depositors that their monies were safe. Why that differentiation?
Well, point of correction, I don't think I said cannot be guaranteed, but at least I was just putting it in a certain context because of the experience.
You said you cannot provide assurance.
No, the assurance is rather what we are providing.
That depositors' money will be, in these 23 institutions, will be protected.
No, I was only providing a caveat because of what we've seen in previous instances. So rather than giving that blanket, I was actually drawing a line between the ordinary depositors and the need for the receiver to do a thorough validation, which is what we've said in both the case of the MFIs and the savings and loans.
Yeah, MFI, you're talking microfinance
institutions. Yes, so the method of resolution we used required that, and it is also due to the nature of these institutions and the nature of the information available to us, the quality of the information. In the banks, it was much more enhanced and better. We had better visibility. So the receiver has been tasked to do a quick validation of all depositors. And the receiver, as you are aware, has already issued guidelines for how depositors effective Monday should come into various branches and file their claims.
Walk
based on which...
Walk us through why you think that the records you have available at the banks derogate substantially from what you have at these institutions, for which reason you have to introduce a caveat that you introduced.
But Malik, you realize that we're dealing with smaller institutions. In the case of microfinance, as you're aware, I mean, the size and sophistication of information systems they have is not the same as what you would find in the bank. We also, based on experience, know that, yes, some of these institutions have not run themselves very well and has not been very transparent. Okay, so that is why it is very, very important that the receiver goes in. Because if you have situations where we've also alluded to creative accounting. So these institutions, per their nature, are not giving us the right reports. We go in and the reports analytically do not make sense. Okay, then it behoves on the receiver with the necessary technical skills to go in, verify these facts, pick up systems, check on everything. So it's very important. Otherwise, then we are going to have to even put money out there. And if you're not careful, some of these monies might go back to the same people who have perpetrated these actions and gotten us to this situation. So this is what we believe is the best. And the receiver has been tasked to do this very quickly. So they've put in place mechanism where you come in, file your claims, they verify the claims, and based on that, we can determine.
And the point you made about the managers of these institutions and their directors going back to the same bad habits, what's happening to them? Why is it that we never find any directors punished for these infractions, which has led to the exposure of depositors' money?
It will come, Malik. And I think yesterday
it's taking too long.
Well, like I said,
is it not?
That is actually outside the scope of the regulator, if you agree with me. Mm-hmm. Because, like I explained yesterday, for us to go in to determine that a company is insolvent or is not holding the right resources to keep on running, it's different from the information you have to gather to prosecute a director. That process, I assure you, is ongoing. It's at different stages for different institutions that have been whose licenses have been revoked in the past, and slowly, yes, we're also not very comfortable that it's running slowly, because that's the criticism that is coming up. But it's better you take your time.
The first two banks that went down, when did they go down?
I think it's August 2017.
August 2017, and we saw, as we are in what, August again, 2019, 2 clear years down the line, we still don't have any tangible information that you would have gathered to give to any prosecutor or something?
No, it is not. Well, I think I'll have to explain this. Whatever information we had or we've collected, we've passed it on to the necessary agencies who are working on these. And I can assure you that a lot of work has gone on. These processes are different and varied stages within the pipeline. There are some legal processes ongoing, some civil, some criminal, and you can follow up with the receivers who are directly in charge.
So you don't buy the criticism that this is taking too long?
I would even have preferred it was faster, because then it puts all of us in. But if that's how it's supposed to be, but I would believe I would prefer that you can direct these queries to maybe the receivers and the prosecuting agencies that are handling these things, so that you get a fair. The receivers are
appointed by you.
Yes, so that you get a fair sense of where they are, because we know that cases are ongoing.
Now, the directors of these 23 institutions, you said you've worked with them to try and see if they can resolve some. What responses do they give you as to where the money is and why they can't meet their obligations? Okay,
so for a regulator, if I realize that you are not carrying the necessary resources you need to run this business and protect depositors, my first requirement is to give you a deadline to make yourself good. Okay. Invariably, these institutions would give us what we call a capital restoration plan. We work with different capital restoration plans, and I must add that yes, we've had challenges. I mean, for banks, being capitally challenged, it's what we deal with every day. Some go down and are able to come up. We've dealt with more institutions who have been able to turn themselves around. For these 23, we're saying that at this stage, we do not believe that any of the plans that they have submitted to us, well, one, it's not been, whatever plan they gave us didn't work, and two, we don't believe that going forward they will be able to. And once the regulator comes to the determination that on your own you cannot do this, then we would have to do it for you, and do it in this manner to ensure that we protect the same financial system.
And that natural question arises again. So you have all these institutions engaged in infractions. Can you state categorically that some persons will be punished for this, especially for the institutions?
It would definitely, for those that are found to have engaged in untoward activities.
How much of that did you find?
It varies. It varies. If you read through,
what are the most serious infractions you found?
Oh, the most, well, one of the few that one of the infractions that run through most institutions, you realize that funds have been placed with related entities, for instance.
What does that mean?
What it means is that these directors, or let's say these institutions. Okay, let me turn it around. When a depositor places his money, it's expected that the institution will take it, invest it in other ventures, okay, so that he would yield the appropriate returns and be able to make good when the depositor comes back to claim his money. Now, if you have a situation where people create companies, sister companies, other entities, and rather than investing depositors' funds in very viable ventures, they invest it in themselves, then that is a challenge, because then there's a compromise.
How does the central bank retrieve those monies from these directors?
The receiver is going after all of them. The receiver is going after all of them. The receiver's job now is to go after all these non-performing assets, whether related party, whether genuine or not. We have situations where loans have gone bad. We have situations where funds have been channeled to related entities. We have situations where funds have been placed with other entities that are unable to pay back. Once that happens, then you have these entities without the assets to back the liabilities, which are the depositor claims that are sitting on their books. And then it is at that stage that we say you are insolvent.
How well are the receivers doing in respect of the banks and the microfinance institutions? How well are they doing in retrieving any monies that may have been improperly allocated by the directors of these companies?
Well, for the microfinance,
the fundamental problems in all of this, job losses. We know that the CBG was created and the purpose was to try and salvage some of the jobs. It doesn't appear in the first two banks that were GCB was allowed to take over. The majority of the workers that they took, some of them had to eventually go home. What is being done in respect of protection of jobs? You are protecting depositors' money, well and good. Jobs, it would appear that thousands of jobs are going to be lost to this.
Painfully so, but our primary responsibility is to the depositor. Now, painful as it may be, because we know the job situation in the country, and that is why in the case of the banks, one of the options we considered, and for the options we need to make sure there's a viable option, was to create something out so that even if we cannot salvage all the jobs, we can salvage some. I just quickly want to add that don't forget that when it comes to the issue of job losses, it is not the regulator that is creating the job losses by its actions. It is those shareholders and directors that have mismanaged their own funds. You have a private person creating his own company, employing people, okay? He mismanages it to the point that the people are losing their jobs, and that is painful.
Before Friday, the people working in these 23 institutions won't agree with you because they were still working, they were still being paid.
Malik, I can assure you that in most of these institutions, in most of these institutions, the workers could not even get their salaries. We had institutions that could not even pay 500 cedis of depositors' funds. How do you believe they can pay their workers at the end of the month?
But the people had hope.
We hope.
Which is better than nothing.
Hope.
Just
when at the end of the day, you are not being paid, okay? You can check the facts. There are some of them that were not even paying their salaries. There are people working in these institutions that had not received salaries for months. And there was no hope, because going forward, that's the determination we've come to, that these institutions are insolvent. Without any credible plan of putting funds in by the shareholders, there was no hope that these workers were going to get money in the near future. We had institutions on that list that had been shut down. They had been shut down. You go to the offices, they were closed down. The workers were not coming to work because there's nothing.
Depositors, any particular ones?
Plenty of them. We had what do you call it? Off the top of my head, I just can't recollect, but the Crest, the Sterlings, the Midlands, the Ascents, and we give all the list. Alpha, they're there. We have huge complaints. We have host of depositors forming associations, trooping to our offices to meet us and complain. Okay, demonstrating. Okay, and you know our requirements. Even for an entity, before you would even close a branch or anything, you need regulatory approval. These guys were so poorly run that they had to shut down and run away from these depositors. So in those institutions, how can we argue that we are causing job losses?
Some may add they were not only poorly run, they were equally poorly supervised.
They were, well, that's the case of opinion, but they were so, we would say, from the supervisor's point, that they were so poorly run. And don't also forget not to hold brief for the supervisor, but we come to these determinations because of the supervisor's work. It is
which is often belated.
Which is the supervisor's work that brought out the facts that these institutions had challenges.
It's often belated.
It is the supervisor that would go in and find that funds have been misapplied. Okay, without supervision, we wouldn't have come to this.
Is the supervisor not required to take quarterly reports from these institutions?
We do take quarterly. We have different forms of returns.
If you take quarterly reports, how is it that an institution can be run down? It can be run down in 3 months, or even in 6 months, or even in 1 year.
We've alluded to, one of the points we alluded to was creative accounting. Okay, one of the points we alluded to was creative accounting.
You're suggesting the supervisor allowed itself to be deceived?
No. Allowed is, and that's the thing. You can, if somebody decides, okay, to intentionally misreport because he's hiding something, okay, yes, you can get away with it once, but not forever, because it will ultimately show. That is accounting for you. So creative accounting was the order of the day for some of them who knew that they wanted to circumvent the regulators' actions. Okay, but ultimately, you could get away with it once, you might not get away with it all the time, because it would show. And that was also rife in these situations. That is what we call, for me, for some of them, it was as if they were on a suicide mission.
In the case of the banks, we know that 7 banks went, 7 or 9. We know that 23 banks were remained. These savings and loans companies, 23 are down. How many are left?
For savings and loans, and we put the two together, savings and loans and finance houses.
Okay.
Yes, we have a total of about 42 institutions overall. There are different classes of them. Some are savings and loans.
Is that 42 that are remaining?
That are remaining. Okay. That are remaining. In categorized as savings and loans, finance houses. Some are finance and leasing licenses and all that. So we have those subcategories. In total, about 40 or 42.
How are we ensuring? How is the regulator ensuring that the remaining ones play by the rules? The compliance is top-notch, so that we don't get to the point where you have to revoke licenses again.
Thank you very much. But yes, and I would start that with what we've started, which has led to this action. And I believe if that is anything to go by, then the regulator is making a statement that never again are we going to allow these things to fester. So yes, that's the evidence of what you're seeing is evidence that the regulator is ready to bite. Okay, that notwithstanding, there are a lot of things we're doing. Having learned from all these experiences and not wanting to get back to that, there's a lot we're doing. You know, we've actually had the benefit of our new law, which is Act 930. It's actually empowered us. We're actually coming up with different directives to make it easy to actually implement these laws very effectively, making it easy for the banks to run, and they themselves understand it. So that effort is actually going to go on. We're also improving our surveillance systems. We're improving on governance practices within the industry. And we're also making sure that we are putting ourselves in a position that will not take us back to this
You
situation.
have used a word which, respectfully, we use in this country frequently, but it usually doesn't yield any results. For example, when floods happen, we say never again. When fires happen, we say never again. When accidents happen, we say never again, but they always repeat themselves. Yeah. How different is your never again?
Never again. Well, floods and all the examples you give, well, if you put it in the quote of never again, these are natural events. They are bound to happen. In the same vein, a bank, we are not saying that no bank would ever collapse in this country. The business of banking is such that if you run and you do not run it well, a very good bank today could go down tomorrow because of just one bad decision. You agree with me? Mm-hmm. So yes, the issue is to put in place the measures to ensure that even when that happens, okay, that process will be well managed. Okay. So when we say never again, we're not talking about never a failure again, but we are saying that never on this mass scale. And we are going to deal with these institutions as and when they come up, just so that we do not allow it to get out of hand again.
One of the major issues that came up was GN Bank. So GN Bank downgraded from a bank to a savings and loans company, and eventually it was revoked. That sounded incredible to many because that looked like a very strong institution.
Yes.
And I am sure that you would have taken particular notice of GN Bank, obviously because of its nature and the persons behind it. What infractions made GN Savings and Loans to go down the way it did?
I think we put out some details on GN.
Which have been challenged.
No. Our decisions to revoke institutions have been challenged severally, but the avenues for redress, we always say, are available to those who believe the facts are not there. These are the facts that we have, based on which we've come to that determination. In the case of GN Bank, yes, as you rightly said, these are very difficult decisions because of the nature and type of institution that it was. And that is why, in the first instance, based on certain circumstances, the decision was taken. Even though it did not meet the requirement at that stage, it was given that second chance to downgrade to a savings and loan. That was an example of not just taking out all institutions, but giving them that chance. You were asking earlier about what other options we could have deployed. That was a situation where we used another method of giving it a chance to resuscitate itself. But in the interest of the financial system, that opportunity was given based on certain conditions. And the conditions were clearly spelled out to them at that time. That for you to be viable, you needed to meet these requirements within this period.
In your justification for the revocation of the license of GN Savings and Loans, you made reference to some transfers that were made, and you said those transfers were made without authorization from yourself and all of that. This is Papa Kwesi Ndum's response, and Papa Kwesi Ndum is the chairman and group CEO of Group Indum, under which GN Savings and Loans falls. He says that the information about the International Business Solutions is false. International Business Solutions has two main business lines: management consulting and import and export. All of the funds mentioned as comprised of payments of invoices for goods and services that were rendered in Ghana. So this was in payment for goods and services that were rendered, and not just transfers into some other financial institution which the group has.
Malik, this is the response that he has put out, but we have also put us out, and this is the central bank. I don't want to believe that the central bank would manufacture that evidence.
But the central bank gets it wrong sometimes.
That was based on the information we had, and an investigation was actually commissioned into that particular set of transfers.
Did he offer his response to you?
We've had. I'm not going to speak to his response. I'm going to speak to the work that we had done. We've had engagements with GN institution on these transfers, and based on that, that is why we came up with that determination. So yes, we would stand by whatever we've put out, and it's instructive that for GN Bank, you're only talking about one of the infractions we put out. If the main reason for revoking GN Savings and Loans license was the fact that it was determined to be insolvent. In addition, we put out other infractions that we had detected. Okay, so it does not change the substance of the fact that the institution was insolvent. We do not revoke licenses of institutions because they've undertaken transfers without. There are penalties to go with that, which is separate. The only time we would revoke a license if you are insolvent. So if in the process we also mention other infractions, those are other infractions that we have detected also exist.
Which he challenges.
But that does not change the substance of his insolvency.
He argues forcefully, and I know you are not government, so this may be an unfair question directed at you, that the government owes not him, but owes his institutions more than 2 billion Ghana cedis.
Yes.
If that money was paid, and this is the state, it's the government that owes him, it's the state. If that money was paid, there's no way that his institutions will be found to be insolvent.
So
he does have a point, doesn't he?
I would turn it, I would flip this question to you. If it turns out to be true that government owed him, and government has not paid, and we've had this storyline for quite a while now,
which has not been denied.
Well, I'm coming to the substance of it, but I'm also saying that for us as a central bank, we're dealing with a financial institution, and the financial institution is required to be solvent to meet depositors' demands. Okay, granted that one of the risks the institution took was to fund government projects and it's not received. Let's say you're a bank. If you give your money to Mr. X and Mr. X does not pay you back, and for that reason your depositors are suffering, the depositors are queuing, the depositors are not getting these funds, is that the most prudent way to use? I mean, that is no excuse to the depositor. We are looking at...
But doing business with government and rendering services to government...
Don't mix us with government, because we are not government. We are to regulate the financial system. The financial system is supposed to protect these vulnerable depositors who have voluntarily brought their money to a financial institution. And for months, for years, they are not getting their funds. So it's on that basis that we are taking that decision, and it has nothing to do with the decision of the institution to invest its funds in government projects was a risk it took, and the risk are supposed to be balanced and managed so that depositors do not suffer. You understand? So I just want to make that point, that we have nothing to do with that. Having said that, in our press release, we've also engaged government, and government had given its position, and we've indicated that even the figures that government had indicated to us that it owes this institution, if we factor it in and it is paid today, it will not change the insolvency determination that we arrived at. And it was on that basis that we took our decision. And don't forget that we've given this institution ample time from when it was a bank. We started having this discussion on government payables to when it was downgraded. And months on, 8 months after it was downgraded, these depositors are still queuing and not getting their funds.
The license for Unibank was revoked. And then in these 23, there's Unicredit. We know that Unibank had the same problems with liquidity challenges and all of that. Do we know what the specific problem with UniCredit is? Is it the same problem?
Is it the same problem as
Unibank?
Well, I think we put a story out on UniCredit, and so we'll just go with that story that we put out there. And for UniCredit, we determined that it was also insolvent because of certain bad investment decisions they had made.
Such as?
Well, they had invested their funds in places where they could not lay access to it, and for which reason they were determined to be insolvent. That was UniCredit's major problem.
For the central bank, all of these decisions have any ulterior motive.
We are technocrats, if I may put it that way. We do our work. We have a job to do. Our job is to protect the sanctity of the financial system. And that is why, irrespective of who you are, if we come in and we make the determination that you made bad business decisions and therefore you are putting depositors at risk, we are going to take the relevant actions to restore that confidence in the depositors. So yes, we have no motive. We do not have any motive.
Would you not be served better? Would the nation not be served better if you, the central bank yourself, took responsibility for some of the things, the failures that have happened?
But we have. We have. In all our previous statements, it's been there that if in any of these processes the central bank is found, people in the central bank are found to be culpable, the central bank will take action. And we have taken responsibility. We have taken responsibility where it is due. But where we cannot take responsibility for is the decisions that these institutions themselves have made, the bad decisions that they themselves have made and run themselves down. We cannot take responsibility for that.
In the matter of the banks, the central bank itself said that some of the institutions did not meet the requirements, the central bank's own requirements, before licenses were issued. The persons who supervised the giving of the licenses to those banks to allow them to operate when they didn't make the requirements, what has happened to them?
I think you're twisting.
Am I?
Yes.
Okay, straighten it for me.
It was determined that in certain institutions, they did not have the appropriate capital. It's different from saying they did not meet the requirements.
They did not have the appropriate
capital they needed to continue.
Is that not a requirement?
Yes.
Yes, so they didn't meet the requirement.
So there are two things. There's before the facts and after the facts. Okay.
Yes.
So information coming to us subsequently led us to that conclusion that these were fictitious. And we actually admitted that. That is what we put out.
So somebody comes to you and says they have such and such amount of money, they are expecting such and such amount of money. If they get all of that, they can meet the requirement for a license. Then you give a provisional license. You were supposed to go and check whether they have all the funds. You didn't check, and then you issued. That's not
really what happened. I don't know whether we'll have time to go into the specifics, but the way you put it, that's not really what happened.
Okay.
So maybe, I don't know whether we want to go into those old cases.
I think the point I just want to make is there are those who believe the central bank did not take sufficient responsibility for that. Not one person was punished for this.
No, the central bank has indicated that it is going to ensure that anybody who within his duties in the central bank compromised and led to some of these things, it would take the person on.
Have you found
that commitment is still standing. That commitment is still standing.
But Mr. the central bank itself cannot take such a long time to find infractions that may have been commissioned by its own staff. That doesn't. You are doing this to boost confidence in the financial sector. But when you yourself are taking such a long time to find persons who may have been culpable within the institution.
We shouldn't reduce this interview to this particular issue. The central bank, like I said, has indicated, and I can assure you that a lot of work has gone in to determine some of these things, and the central bank has made a commitment.
Are there any persons who have questions to answer?
I cannot give a direct answer to that. I cannot give a direct answer to that.
If you found them, what would you do?
The appropriate people are handling it.
If you found them,
the appropriate actions will be taken, and
such
the commitments have been made. It depends on what you find. It depends on what you find.
What do you anticipate to find?
I don't want to hazard a guess. I don't want to hazard a guess. I think we are dealing with people and reputations here, so it depends. But if anything is found, I believe the right actions will be taken by the central bank, and I can assure you that that will happen.
Mr. Mako, it's been an honor talking.
Thank you very much.
Thank you.
3, 2, 1.
Yeah, so Mr. Mako, the point about GN Group, and I think that appears to be the sticking point for many. And as I said, this is an institution that looked very, very robust, has very strong personalities behind it. So everybody believes that there's some other motivation for which GN Savings and Loans license was revoked other than just that it was insolvent.
Malik, I think I've indicated that per our press release, and I think we put out all the details. We came to the determination that GN has been insolvent, even though we were fully aware of his claim that government owed them. For GN, and as we indicated in this press release, these debts that are owed to it are not owed directly to the bank. These were owed to affiliate companies of GN. Okay. And we've indicated that in our press release, for which the bank indicated to us that they would assign to the bank if government pays them these funds. Okay. These were not loans that the savings and loans, or when it was even a bank, was granted. These were from affiliate companies. And then we had realized that GN was exposed to its affiliates, and they were indicating that they were going to use these payments to offset when it comes. But having given them all the time, up till now, from when they were downgraded to a savings and loan, up till now, we realized that these funds are not coming. And
because the
vulnerable depositors were at risk. They cannot get their funds. Okay, so that is the story behind GN. These funds were not directly owed to the bank. These were owed to affiliates. And that is why we referred to him as giving funds. The whole model was financing its affiliates companies. And that in itself is very problematic.
And your case is that if even the 2 billion that the group claims,
well, from our write-up and from the information we have, we had indicated that if he had told us that a total amount of 942, that's what is in the press release.
Okay, and 900, not 2 billion.
Based on which we claim that what the ministry had confirmed.
And finance ministry are talking
Yes, the finance ministry had confirmed, and we have correspondence to that effect. Okay, if we take all that into consideration, it cannot cure the level of indebtedness or the level of resolve the insolvency challenge. It was based on that we came to the determination that the company within the near future cannot be turned around.
Dr. Papokusindum in his statement says that you have killed again one strong Ghanaian company.
It's very unfortunate that this seems to be happening to all to most Ghanaian companies.
Why is that?
That's a question we should all be asking ourselves. Why is it that they are the ones that are not well run?
That's why something you are targeting them.
Why would we, Ghanaians, target Ghanaian companies? We are not in the boardroom to take the bad decisions.
Mr. Amwako there speaking to Malik Dabu, Elliot Amwako, Deputy Director of Banking Supervision at the Department, Banking Supervision Department at the Bank of Ghana.